Good morning, good afternoon, good evening, traders all over the world. Today, I'm bringing a very, very important topic to you that will address problems of many beginners traders. I've noticed quite sometimes now that even intermediate and some advanced traders, they spend so much time in deciding their entry. They have their strategy. They spend so much time in determining their entry strategy, but they don't pay attention to exit strategy. So that is what I want to explain in this video. I want to bring to you what you should see before you know that your trade will not proceed in the intended direction. That even if it's going to proceed in that intended direction, it might not be on the session, on the current session where the trade is initiated. And there are some things you will see too that oh, this trade is going to proceed. And that even if it's going to pull back against me, it's not going to come near my entry. There is nothing like certainty in trading financial market. All right. So in saying that it's not going to come near, it's a wrong statement. It's potentially not going to come near, or probably it's not going to come near. That should be the best language, because there is nothing that is certain. I had traded before where I was looking at a profit of 15K before me, but within 5 minutes, it came down to as little as 2K. That is trading for you. There is nothing that is certain. It is until you clear your profit that you know that you have made money. Is that okay now? So I want to cite a case study of GBP CHF and Euro GBP. I want to give you a clear example of what you will see before you know that your trade is going to proceed in your direction and in that current session. All right. What I mean by in that current session is assuming that you are in New York session and you have sold a particular pair, and 2 hours, 3 hours into New York sessions, the pair refuses to what? To push along your direction. All right. There are things that you see that should tell you that this pair is not ready to go. You should therefore close your position. Otherwise, it's going to end up in losses. All right. So there are some of those things I want to show you. Let me start with Euro GBP, guys. Let me start with Euro GBP. Let me start with Euro GBP, guys. All right. So in this setup here, let's look at daily. See, daily, we have already analyzed fundamentally that we expect Euro to weaken against the GBP just because of their interest rate differential. And then when we look at this, is on its way to the upside, and then the higher it goes to the upside, the better for us. Okay, haven't understood that, we're monitoring the situation very closely, and when this was pushing to the upside, I told my students, my group, that I needed to see a consolidation here, okay, and a push up. Okay, after that push up, I needed to catch it as a psychological level here of 0.86. Okay, and when it came to 0.86, it was cut to the downside. But now, when we cut it to the downside, at what session did you catch this trade to the downside? I want us to look at something. Just pay attention. Watch this video to the end so that you can see the second scenario where you don't need to hold your trade. Look at it here, guys. Look at it. This is 6, 7. This is 8 o'clock. This is London session, guys. Look at the push. Can you see the strength of the sell? Can you see it? Very powerful. Before the end of New York session, before the end of New York session that day, or London session rather, here we had already made between between this and this almost 100 pips drop. All right. So because of this push, and because of how this market push in the middle of liquidity, you have assurance that the projected target to the downside might probably come. And therefore, if this market had not come, this push had not come on a Friday when we're expecting markets to close, we will have had it. And then this market will have pushed all the way down to this place. And then even here, we just have a corrective structure and continue to push down. Do you get now? But because it was on a Friday, we had to close. We had to close the trade at this level. But the issue is, why should we hold this trade to the downside? Because when we caught the move in the middle of liquidity in New York or London, there was a great push to the downside. No, the push to the downside was impulsive. That's what I mean. When you catch an entry at the right spot and in the middle of liquidity, like London session, when there is big volume in the market, like London session, like New York session, you now discover that you have an impulsive move into your direction. You are in profit with an impulsive move. The market is moving very fast. 80, 70, 80, 100, 120, 150 pips in profit. Is moving. All you just need to do in such a scenario is just to break even. Just break even and allow the market to push. In as much as you have seen your setup here that grab liquidity as supply and then move to the downside very powerfully, very hard. When it pushes like that, you know it's going to go all the way. But what of in a situation where you now enter such trade, like let's say GBP CHF, like this pair, all right? At this level, we had forecasted that this market was going to complete this corrective structure, and we actually caught the move here. All right, I got in here, and the setup was that it was going to terminate at this supply area. This is supply area, guys. For the sake of those that do not understand what we mean by supply area, let me show you. When you come to the top of price range this way, and you see some powerful candle, you see some powerful sell candles here. Look at this candle, guys. Look at this candle. Look at these two candles. These are two powerful sell candles. You don't even see element of buy in between them. You can't see it. So from here, from this level to this level, is a supply. There was excess supply over demand. There was no even demand at all, no element of demand here. So all the sell, all the sell pressure was what we witnessed here. So the question is, when we get to the exact same level over here, we're expecting markets to react, okay? And the kind of reaction we're looking for is a reaction that you have consolidation, a push up, and then you have a move to the downside. So if you take this market to 15 minutes, remember, we are inside the supply area. So inside supply, you want to see a consolidation happening there, right there. Look at it. You see, don't be fooled. This is a consolidation. Forget about the structure. It's not a must that at every point in time, consolidation must be exactly sideways like this. Consolidation can come this way. It's also a consolidation. So this is a consolidation. And I told you, this is a pattern I love to trade so much. It's a pattern that when seen in the supply or demand area, we really lose it. All right. So after that consolidation, what do you see in the London session? This is the Asian range. This is the Asian range. If you look at the time here, it's 22. If you look at the time here, it's 6. That is 7 o'clock. This is London, start here. This is Asian, start here. All right. Look at the Asian range. After the problem that was created in the Asian session, what do we see? Boom, to the upside. London session reacted to this. And where is it, guys? London session. All right. And after London session, What do you see next? You're supposed to see a reaction to the downside. Okay, that is the expectation here. But what did we get? Now, what did we get? Look at how we got in perfectly into this, into this trade. I had a position here. All right, I caught a position here, but I actually sent this trade to my group when it was exactly 1.2400. When it was 1.2400, I encourage them to enter at psychological level, because I know if this market is to push to the downside at psychological level here, it's not likely that it's going to come back to test the top. If actually that what it picked here is the true liquidity, if you grab it from here, it's not going to look back until it break this low. It's a theory that I have formulated for myself, that when there is a true liquidity grab at supply or at demand, the price is not going to stop until it get to the middle or below the consolidation from where that liquidity, that engineer that liquidity. This is the consolidation that engineer this liquidity. So if this is a true liquidity grab, it's not going to stop until it get to the middle of the consolidation or below the consolidation before you see any corrective structure. But if you are seeing, the market turning back before it gets to the middle of consolidation, get out of the trade. That is number one. Number one reason why you will not proceed with the trade is if after the supposed liquidity grab, the market begin to retrace before getting to the middle of the consolidation that, that caused that liquidity grab, get out of the trade. Because the possibility of the market to coming to test the high, pick another order, break this top, pick another order and push down, that probability is there. That is number one. Number two, in a situation where you now see the pair that we thought had grabbed liquidity is coming down, that pair is now coming down, price is coming down correctively. When it's coming down correctively, then there is problem. It means that it has not picked the right order. It has not picked the right volume that is needed to push the market to the downside. Therefore, it's going to visit the top again. So, as a result, when we were here, guys, when we push down and this candle appeared, I said, okay, it could just be a pullback. I was thinking I had to tell my traders, let's get out of this trade because it's too corrective. It's not impulsive, and it needs to be impulsive like you have in Euro GBP. If you look at Euro GBP, you can see what we are saying. You can see the difference. Can you see when we cut it at this level, guys? When we cut it at this level, can you see within that session, it was impulsive, 100 pips drop. With this, we knew there will be corrective structure for us to push it down again. Although, unfortunately, when this corrective structure appear, we're expecting it to at least come to like 50% or 61.8, come to supply area here before we push it down. Unfortunately, the market did made a shallow retracement and it pushed down. So it went without us. No worries for that. All right. So you can see how this pushed down, but you come to GBP CHF, you will not see such. It was coming down correctively. So as it's coming down correctively, I knew that it was going to test the top again. We needed to push to this level to give me assurance that it was not going to test the top. But since that theory, was not respected, it was pushing down and it never got to the middle of the consolidation that caused the liquidity graph. As long as it did not come to that middle, you have to close your trade. All right, you have to close your trade. It then means that you are going to experience another push, most likely another consolidation and push up. Whatever be the case, the least that we'll be expecting from this pair is for it to come, test the top, break the top. But guys, I'm not going to get it until I see two conditions. If it's in the process of coming to break the top, it now gives you consolidation and make an overthrow to the upside to break this top. Guys, you look for sub-psychological level like maybe 1.2450 and getting for the sell. But guys, if it doesn't give me any consolidation, it gave me what you people call double top here, I'm not going to get it. I won't be part of it, because the reason why I won't be part of it is that a market cannot give me a double top here and I will assume that it will go all the way to the downside. No, I don't think like that. You know, when you are thinking like a retail trader, you have that kind of notion. But when you are thinking like a professional who knows what he's doing, you will know that if this market comes this way, possibility of it pushing down hard might not be there. So in that case, it might just be like this and come again to break the top, And in the process of coming to break the top, it might form consolidation around this level. You know, when it's going like this, many people will think it's a buy again. They put buy stop here without taking cognizance of the fact that we are purely at supply area. You know, we are purely at supply area. So any buy setup at supply area is time invalid. Okay. So as soon as you break the top, you look for psychological or sub-psychological level, and you look at the session where you can possibly get the required liquidity to push to the downside. Then you just push. That's all. So that is how to look at this pair. You know, this some of this setup. So these are things that you will see to know when to get in or when to get out. You have seen the setup, how we got in. You have seen the one we did not get out. We remain in the trade, like Euro GBP, we remain there until it pushed down. All right. And you see another one that we didn't need to remain in the trade. We took our small profit and left. Why? Because we expected that if it has truly grabbed liquidity at supply, that liquidity should have been enough for it to push very hard to the downside. But it didn't push very hard to the downside. It was correcting. So the logical thing we could do was to just, you know, close our trade and expect more volume to develop so that we know what to do. All right. So guys, this is just the little trick I want to show you and to encourage you to spend more time on understanding price behavior that will lead you to close your trade. Prioritize that as much as you are prioritizing how to get the technical setup for your entry. Entry and exit are equally important. All right. You don't place priority on entry and you don't study exit methodology. All right. As you are studying entry system, you must also study exit system, because if you get a perfect entry, guys, and you are not getting out at the right time, you discover that you're going to lose all your profits. So of what essence is your entry perfection? So don't tell me you are perfect in terms of entry and then you don't know anything in exit. It makes no sense. That is why I needed to produce this video. I plan to produce this video so that it will help somebody make correct decision. All right, guys. Before you go, don't forget you should subscribe this channel if you have not done so. And if you have subscribed, ensure that you pass your comments at the comment section. Let me hear your view about this video and how it's able to help you and how you plan to execute it. Because this is a plan. If it has not been your trading plan before, make sure you put it that when you are trading and you are seeing that the market is corrective, meaning that it's going to break against you. All right, it's going to break against you. So, all right, I see you next time with a more important content. See you next time. Bye. Peace.